Well, if you've been paying attention to any of our content we've been throwing out to the world recently, you're probably privy to the exciting news that we've launched our very own mortgage brokerage. And it's called Klinger Home Loans. And it's not just because we lack the marketing budget to come up with a really flashy, creative name. There is actually a little bit of intent behind the family name, Klinger Home Loans, of the brokerage. Matt, do you want to speak to that just for a moment?
We branded around the family name because it's our family serving your family. Our business is Todd and I, like us as brothers doing this together. When we've talked in previous videos about cutting out overhead, we're not hiring a bunch of staff and people to help us with this process. We're running at this together. And we're doing that because we believe that running an efficient company can ultimately help your family, because we're not passing all of those costs onto you. And so it's our family serving your family. And we wanted to brand around the family name because it is a family business.
Yeah, and so many of you, if we've had the pleasure of working with you, or, maybe you're a referral partner or whatever, you know me and Matt, but talk about dad, talk about mom, talk about our upbringing just for a little bit. Because yes, we sell mortgages, but more than just the mortgage alone, we really pride ourselves in helping people kind of navigate the financial complexities of their life. And yes, a mortgage is a big slice of the financial pie of your life, but it's not the whole thing. And so we really try to offer sound financial counsel, looking at the whole picture holistically. But talk about mom and dad, talk about our brother, talk about upbringing and how that's shaped who we are and what we do.
People ask me frequently, like, do you have a formal finance background to get this job? No. But far more valuable than an expensive education in accounting or finance or whatever was the School of Hard Knocks by Mark Klinger. My dad started teaching me about budgeting when I was 4 years old. We just come from a family that finances were emphasized. And I'm super thankful for that. Like, I learned a lot of valuable financial lessons at a young age, to where it just lent naturally to this industry, because now I get to pass on some of that advice that I got from our father onto other people, because we just learned the value of budgeting. And now we get to talk to people about buying a house and how that impacts their budget to help them make informed decisions. So thanks, Dad.
And Mom, behind every, decent man, is a really great woman. Mom, we love you, and couldn't do it without you. Mom, that tattoo on my arm, that's not real.
Mom is so proud of us right now.
If she's watching on social media. Actually, she spends a decent amount of time on this stuff. Grandma is really proud. She spends a lot of time on these.
In between Candy Crush games, she loves these videos.
Oh, man. Before I started making stupid jokes, I had something else to say about all of that. Here's what I was thinking while you were kind of talking about growing up in Mark and Connie's house. But I kind of thought the way that we operate and just kind of the financial foundation that was laid for us, that really set us up for success, to be honest with you. Like, I took it for granted. I thought it was common knowledge. I thought everybody was doing these things, and you were weird if you were. And I'm talking, relatively simple things like don't spend every dollar you make. Save a percentage of your income. We were taught, we were raised in church. Give a percentage of your income away. Be charitable with your life. And just these kind of core foundational or elementary kind of concepts that it's just always been normal to us. But now that we kind of peek behind the curtain a little bit and are invited into people's financial lives because of what we do for a living, what I've discovered is that what we were raised with was really a true blessing, and it's not super normal. What do you think about that? And maybe take it a step further and how we're helping people kind of recover. Maybe that's too overstated, but implement some of that stuff.
Well, I like to tell my personal story of the first time I got pre-approved before I was even in this industry. When I first reached out to a loan officer, again, I knew nothing about mortgage, wasn't doing this for a living at the time. I filled out an application online, and the next thing I know, I got a pre-approval letter for, at the time with what I was making, I thought was an astronomical amount of money that I literally told my loan officer over the phone, you are crazy if you want to lend me that much
Can
money.
we put some numbers behind that? Just tell people, this is a long time ago.
I was working for a nonprofit making $27,000 a year. And
Gross income.
Gross, so before tax. And I got pre-approved to buy a house for $300,000 with 10% down. Let's just say if I actually went forward with that transaction, it would have been I would have had a mortgage payment of around $1,500 a month when my total monthly pay was $3,000 before tax. So anyway.
Did you want to eat back then? Had to have a food
I
budget
wouldn't have
in
been
there.
able to eat back then, but I went to mom and dad's for dinner that time of my life anyway. So
love your mom.
All that being said, I knew that was a poor financial decision because of what my mom and dad taught me. My loan officer, it's not necessarily his job to teach you about budgeting, but the reason we ask what is a comfortable monthly payment as part of this process is so we can give you good information that is helpful to you and your budget, and not just send you a letter with no context that may not set you up for financial success.
Yeah, I think that's all really, really good. And again, just trying to emphasize the heart behind what we do. Yes, ultimately we're in this business to make money. We've got to feed our families. Not everybody's going to Connie's house for every meal anymore, even though Matt really ran that one into the ground and took advantage of it. But we really just want to help people on their financial journey. We know that home ownership, it's a small slice of the pie, but it's a big line item in your budget. And I guess I'll speak a little bit about my own experience with, my first home loan. This is years ago, but we were kind of raised under the school of thought that debt is bad. Debt is bad. You should avoid debt at all costs. And let me just be very clear. I agree with that to an extent. There are certain types of debt. Consumer debt. If you've got credit card, just rack up expenses on a credit card that you know you can't afford. That is a debt that should be avoided like the plague. If you can't afford the car that you purchased, but you have an outstanding car note and your payment is astronomical, that car, hate to break it to you, it's going down in value every mile that you drive. I think, yes, we all need an automobile to get around and navigate and to live our lives. So yes, you can take on a debt, but if it's way too large, that's a bad debt. Now, when it comes to a home mortgage or debt on your home, that's a little bit different. It's actually a bit different. Do you want to speak to that at all? How you're leveraging debt to acquire an asset that historically has appreciated over and over and over and over again.
When you're taking debt out against a home, as Todd said, there's a magic word in this industry called appreciation, meaning the asset, the house that you purchased in most every scenario is going to go up in value. That debt that you took on to acquire that asset should be building wealth because of appreciation. Almost no other debt is going to allow for appreciation. Credit card absolutely has no appreciation unless you're buying like a classic car that may be a collectible. It's not going to go up in value. So appreciation is so important when evaluating what kind of debt you're taking on, because that debt is allowing you to take on an asset that is going to be worth more and more and more, and that debt is going to go down, down, down every month you make a payment.
So anyways, that's the heart behind what we do. We're so thankful for our family foundation, the way that we were raised. So thankful for the family values and the financial principles that our mom and dad passed on to us. And in a small way, through this humble business, Klinger Home Loans, we want to do the very same for you. We want to see you succeed financially. We want to see you succeed as homeowners, and we're here to help you navigate every step of the way. If you're not in the market for a mortgage today, you maybe know someone who is, and even if you have questions, we're not here to just sell you a loan. We're here to help, so reach out as needed.